All right. Good morning, everybody, and welcome. It's TheoTRADE Chat. It's Don Kaufman here on this Monday morning. There's 3 minutes to go to the cash open. It's really freaking cold in here right now. I'm working. It's like 66 degrees inside of the house. I didn't even turn the heat on. Just forget it. I can't take it. I'm up in the mountains. It's very cold. It's very cold up here. All right, let's get started with markets this morning here. So on this September morning, we are looking at the S&Ps up some 22 handles right now with the Nasdaq. Interestingly enough, the Nasdaq is actually lagging the S&Ps in early trade. It's predominantly because NVIDIA, it's not down that dramatically. I mean, not up as dramatically as Tesla happens to be. So tech is having a little bit of a war unto itself this morning, where you've got Broadcom is largely unchanged, and Apple, very, very mild bid under it. Microsoft's unchanged, and there's nothing going on in Amazon. There's Google, a little bit of a bid. Meta, there's nothing going on. It's NVIDIA versus Tesla today in terms of big tech. And I'll tell you what, I'm a little taken back. You still have even financials. They're headed mildly higher, but net, okay, it's dragging the S&Ps literally. You've got Tesla dragging the S&Ps, kind of kicking and screaming. I'd like to say I see a lot of stuff up. I do see really positive advanced decline line coming out of the gate this morning. But you look around, like the energy sector, it's not exactly flying. The financials, they're not ripping. They're up about 10, 15 cents into the cash open. It's literally, it's this move in Tesla that is the as the kind of a critical standout this morning, and kind of, as I said, dragging the S&Ps along with it. So the fact of the matter is, it's flat almost everywhere else to a very mild bid. Interestingly enough, with this marketplace on the bid this morning, you do have a little bit of volatility picking up. I'm going to discuss this because the VIX is not necessarily what you think it is. The volatility futures are down. We're also going to look at the VVIX after the cash open. I would anticipate that the VVIX should be coming up a little bit throughout the course of this week, anticipating a little bit of action around the Fed. Let's come to today's cash open here with again, very strong advanced decline line, strong. So AD line, actually not as strong as I would have anticipated out of the gate. I was looking for like 70 products on one side of the marketplace. We're not even there. Ticks out of the gate. There you go, positive 1100. Now the ticks are definitely there. There's now there's your advanced decline line of about 70 products trading to the upside. The again, S&Ps right out of the gate this morning, though, catching a little bit of a bid on this heavy positive tick. I'll tell you what, Microsoft off nominally. Meta, okay, was actually up in the pre-market. It's off nominally. It's quite the little rotation here, very early on. NVIDIA, after being down fairly dramatically in the pre-market, I mean, traded all the way to 172, actually has a bid back under it. And of course, as I said to you, like if there's one thing to point the finger at this morning, be like, that's the stock that's driving the whole marketplace. Obviously, it's Tesla, and it's really simple logic over here. It's a huge gap up. Elon Musk, for the first time since 2020, has bought shares of Tesla. It's just, I mean, I think for investors, there's a lot of conversation about him eventually leaving the company. This is a clear and decisive answer to that, and the answer is hell no. Not only isn't he leaving, I know you're disappointed. Not only isn't he leaving, but he's buying more. Okay, you would think that he already has enough. Okay, apparently that is not the case. Significant purchase, though, of Tesla shares by Elon Musk, and away we go. Again, the stock's up about 7%. And that's your trading session right now. The only question here today is, are we going to see a little bit more slippage, that is sell side activity, out of NVIDIA? NVIDIA having some rather negative news, also pulling down Broadcom very mildly. But again, it looks to be right now, markets kind of impervious to those moves. Everything right now is resting pretty much handful of products. You've actually got a little bit of a bid back into Apple too this morning. So interesting kind of start to the week. Again, we're surely picking up where we left off last week, though, where it's it's not necessarily about financials. It's clearly not about the energy sector in here. It's all tech all the time. So sorry, I'm glancing over at Walmart because kind of anticipating this thing to break to the upside in the days to come. With that, yeah, Gianni actually had, for those of you who don't know this, in I think 2 different portfolios, Gianni actually he bought a call in Tesla. I didn't like the trade that he did, but it still exploded to the upside, and that's okay. Like, again, there's directionally biased trades that I don't necessarily have to love, but that thing absolutely exploded to the upside on Gianni. And as I said, kind of away we go over here. That was a huge winner, absolutely huge winner inside of Tesla. He's still carrying some shares in there, but again, another $2,000 today. Not a half bad trade for 2 days in there. Anyway, with that, so for the trading session, and for the time being, I'll kind of go through. There's a $36 expected move today. Sorry, I'm losing my voice already too. It's cold up here, man. It's cold up here. So it's cold up here, and I'm not used to the cold. So I might be getting a cold because I'm not used to the cold. I'm going to go back and head down to the warmth a little bit. So I woke up this morning. It was only like, I think, 43 degrees up here. It's good stuff, man. It's good stuff. I'll be in 100 degrees in a couple of hours. So the S&Ps right now are up some 25 points. And the reason I'm bringing that to your attention, the expected move for the day is 36 and change. Now, the marketplace is largely dependent upon what? If you take a look, the S&Ps are up 0.3%. The financials are a laggard against that. Obviously, the energy sector is down. Okay, the only thing you really have, is a bit of Google. Google's got a kind of a wild bid out of the gate. That's not gonna help me much right now. I just put a Google trade on too, because all the fuel was basically dropping out of Google in the last couple of trading sessions. Well, this just reinvigorated it today, but to the tune of about 3%. I'm just kind of curious inside of Google. We're gonna go look at some of the order flow. Yeah, there's nothing really going on. It's pretty amazing. Google's up this much. There's almost no volume on it, and your options order flow is negligible. So you can even look at Goog. So you have to kind of compare and contrast. There's nothing going on here. Markets being fueled by like low liquidity call buying. That's it. There's just very, very low liquidity. And when I'm saying low liquidity call buying, not just a statement. Look, the sizzle index is at 0.57, which indicates like half the kind of volume it would normally see at this time of the day versus the previous 5 days. So nevertheless, there's still 7,000 contracts that traded at the ask or above. So this stock right now is being fueled by a very, very low liquidity trade. Interesting to say the least. I'm actually surprised by that, only because look at this. The size in here is jumping, but it's still incredibly low. So I'm surprised by it because we came out of the gate looking a little bit more fierce. I would have expected a little bit more trade behind that. That's not the case. Tesla, when I was saying like low liquidity, Tesla is going to be anything but. Tesla already trading almost 350,000 contracts in the first 7 minutes of the trading session. But the amount of calls bought and sold are actually really even in here. This is just a gap higher. There's nothing going on though behind it. What this implies though is that the stock should actually either flatten out or kind of fade maybe just a little bit, just based on what you're seeing right here. There's more puts being sold, more calls being sold. We flatten out and kind of roll over a little bit in Tesla. It does not does not imply any big sell side activity, but it also doesn't imply any buy side rushing back in for that. So the point being, and the reason I'm going through some individual issues in here, okay, what has the bid under this marketplace seriously that matters? Okay, what's holding the marketplace where it is that really matters? And it's Tesla. Okay, you can't even really point to Meta. Meta is mildly above on a percentage basis where the Nasdaq is trading. Obviously, you have a little bit of Google. Okay, some Amazon now and some Apple. Okay, so it's tech all the time. Let's dig into a couple of stories in terms of trade today that I think are appropriate to discuss at a juncture like this. So just cruising down over here, and VVIX just kind of creeping up a little bit. Nothing going on. So I'm not reading too much into the VIX. As I said, I'll explain this in a few minutes when things kind of calm down a little bit in the S&Ps. The reason I've brought up multiple times this $36 expected move is because that's probably where you should look for this marketplace to head, which is about 10 points higher than it presently is. It's not a huge or dramatic expected move this week, but well, we'll come back to this in just a moment. This is a fairly, nominal move out of the gate. If we hit the expected move, just like $36, we're making just over like 1/3 of the move for the week. It's, you're 9 minutes into a trading week here, and you're already talking about, some pretty substantial movement in markets. All right, back to advanced decline line for a second. Okay, we're rotating pretty much out of anything and everything and just buying a handful of tech stocks. I think that's relatively apparent. Okay, there's just not a lot of broad-based buy-side activity today. The Russell is also, kind of stuck in the middle with you, as is the Dow. They're not doing anything in the on this trading session. By the way, I know that you guys are looking at this and you're like, oh, these are huge gaps higher. Okay, they're not. It was a contract roll. I will also discuss the contract roll here in the next few minutes. Before I do that, I want to actually get to some individual stocks to discuss. And then, of course, we'll talk about some of the trades that I've got on for better or worse. The only thing that's worse today is really Google, which, again, I really am surprised to see Google back on the bid. It's the first time in a long time I've actually faded a tech stock, and it is not working. All right. The first thing to discuss over here, Tesla. So obviously, as mentioned before, Tesla is the stock that is carrying markets. Okay, I've already indicated this thing should kind of, as I said, slope a little bit lower. Okay, it doesn't necessarily, again, have to have big sell side activity. The order flow is not, this is not indicative of sell side, although it's starting to pick up. There's a lot of calls being sold. Calls being sold is prototypically retail getting out of positions that are likely profitable, right? Just like, Gianni did this morning. So calls being sold in here, it just dampens the ability for the stock to continue higher. The reason I'm spending a couple of minutes on Tesla is because Tesla is the market this morning. I mean, yeah, you got a little bit of like, Meta's picking up, Google's picking up a little bit. But there's just not much else to be the big driving force, behind markets this morning. So yeah, no, you have to pay careful attention to some of the order flow in something like Tesla. If this continues to slip just a little bit, all it basically does is it's prohibitive to the S&Ps. I kind of like, oh, we should move $36 higher, except Tesla now is starting to become prohibitive to the S&Ps. We may see a rotation into another stock, okay, but right now, well, not so much. Although Apple is seeing sell side activity, you're not seeing that reflected in NASDAQ. That's because for every inch Apple has given up, it's coming to Google. Okay. It's again, we're just seeing rotations. Like when people are looking at this and they're like, the market's never going to go down. The one thing you got to understand, okay, this is not new capital coming into markets. Yes, there's always new capital in terms of, and it's small, it's incremental in terms of like people funding 401ks. That's just consistent. That's small capital. There's always going to be stock buybacks, which is, again, another reason that markets can go up. But almost everything that you're seeing right now, okay, is trading firms just attacking with algorithms, okay, and driving markets. And that's it. I mean, that's when I say driving markets, they're driving markets in the here and now, in the very, very short term. Okay. So we can start to squeeze one direction, kind of keep going with it. But look, as fast as this marketplace, has rallied, okay, it'll eventually turn around. It'll be some two-sided trade. You don't necessarily have to get caught in that crossfire. Place positions when and where you're comfortable. Use defined risk. Okay. Use spreads. Not too concerned about. Okay. I'm actually going to exit this. So up 50% in a nice big Christmas tree. Todd has to get ready. Get ready, Todd. I'm going to fire one of these suckers off. Okay. It's a brief intermission for Don to fire off a decent sized trade here. These are Christmas trees. It's Christmas again. That's not bad. That's not bad at all. See if I can get out of this for, my guess is I can get out of this. Don't, okay, for somewhere right around $7 even. And that's exactly where I'm going to fire it. He shoots, he scores. All right. So just exiting some Christmas tree. Funny enough, I think I have that over in this portfolio too. Oh, there it is. There it is. Another Christmas tree. So I'm going to go ahead and exit this one as well. By the way, the easiest way to exit a trade like this is just go in there and find the trade, and then you can go similar order. Whoops, swing and a miss. Okay. Or opposite order. You didn't see that. That way you use your error. This one I'm going to go for $6.95. So I filled 7, but I did not fill $6.95. Oh, there we go. I did fill it. Okay. And the last one I've got in here somewhere, it's my SEP IRA. I've actually got one of these too. All right. It's a party now. Wow, that was a little choppy, wasn't it? Are we having fun yet? So sorry, I've got to send these over to Todd now. So making Todd's life hell, and it's only 6:46 in the morning. Okay, I'm okay with that. So it's what I do. It's what I do. Don't. What is it doing? Oh, come on, man. I'm having problems over here. Get off the screen. Get off there. It didn't even take the picture it was supposed to. I don't even know what the hell that just pulled up. All right. Sorry about that. So Yeah, my Christmas tree has been filled about a 50%, and then I have to re-enter into a couple more. I was trying to shoot a picture of this for Todd, but given up on that one. Okay, so sorry for the disruption. Profitable trades coming off. There's another one. I have another one in here too. He's got another one. All right, we're still working this one. Just taking a few nice profitable trades off. So it's Christmas. Okay, it's Christmas. Yeah, so somebody was saying, I haven't done a Christmas tree in a while. It appears Tasty is letting you open and close as a package. They actually, they're letting me open and close as a package always in the spiders, but it's here in the MES that I had to actually tweak them a little bit. So yes, we're good to go. We're good to go in there. So Christmas trees are working out quite nicely, as are the this is the shadow clock, and this is actually working out quite nicely too. Only on for a couple of days, up some 7%. You got to realize, like these trades are boring. You just put them on like the Christmas tree. That the Christmas tree that I did. I want to see the exact opening and closing orders. Well, I opened them on 8:15 was the first one. I just, by the way, that's when I actually sent out the alert. I opened it up on August 15th, and it closed it exactly a month later for a 50% gain. So I did a two lot, which is the equivalency. Like, what did I make in there? On a two lot, I made $1,400, and there's no management, there's no nothing. I just sat tight on there. They're pretty straightforward trades, the Christmas trees, but the Christmas tree is also one where you better know what you're doing when you build that trade. You better understand the margin implications of it, because it's sometimes it's the easiest trades to open and close that can be the hardest trades to manage down the road, and that's absolutely critical. So the Christmas tree has been open and closed, and everybody that went to the Mega Mastermind has a 1 year subscription now to the Christmas tree like service. So I'm kind of opening and closing Christmas trees. And then, of course, the trade that I just started doing now is right here in the VX, which is the shadow clock. It's just a volatility calendar spread. Looks easy enough, and I show it to everybody. Again, sometimes it's the easiest trades that can be the most difficult at times to manage. But this trade, since inception, it's only been open a few days. You're like, oh, it doesn't make that much money. It's only been open, okay, for roughly 5 days, and it's already up like 11%. Okay, we're not trying to exactly kill it in this trade. Okay, the P&L in the day is not nearly as important as some of the P&L from the open. Okay, so just one unit is up $140, but I've done nothing. When I say it's been open for 5 days, it's been open for 5 calendar days. So in effect, we've been closed for 2 of those days. I opened it on Wednesday, so the market was really on Thursday, Friday, and then today. And it's already up $140 for doing absolutely nothing. I'm good at doing nothing. It wouldn't be up this much if the marketplace was like, getting rocked, but in markets that are wild like this, to the upside, these trades are, a great way to take profitability out of it, without having to be all that concerned. Somebody said Google's losing some of the mojo this morning. Let me take a quick look. Yeah, not too sure in here. Okay, I'm actually honestly of all the things that I'm seeing in today's price action, Google surprises me the most, because what I saw on Google last week on Wednesday, Thursday, and Friday, I actually entered into a bearish position on Google, and make no two ways about it. I don't sit here and like, oh, I could have done this. And I entered into a bearish position. You got to own it. So you entered into a bearish position and we popped to the upside. But one of the things that I saw to enter into the bearish position is that order flow totally and completely dried up in there. It was crap. Like no one was trading anything in there. And in addition to it, it had already like cracked the upper edge of the expected move, hit the upper edge of the expected move. And this is now a third time. It's already at the upper edge of an expected move, and the week has just begun. So, now I'm in this position. All of a sudden, you're like rapidly down. You're like, oh, I'm already down by like 40%. And this trade sucks. You got 25 days left. Okay. And again, just as quick as you could be up 30 or 40% of the trade, you could be down 30 or 40% of the trade. There's nothing unusual per se about Google other than I'm surprised at the pop today because the order flow was so crappy. But then I'm looking at it today and I'm like, and now it's actually picking up quite a bit in there. But this is not positive order flow either. So we'll see if it fades on the trading session. Okay, that's all you can say. Hey, it's pretty wild trading. I normally don't step in front of like the freight trains anymore in tech. When was the last time I actually shorted tech? It's been a while. The last trade I did in Google was actually bullish. So I haven't stepped in front of tech in a while, but I also haven't seen order flow dry up like this in a while. It's interesting, very interesting. Okay, onward and upward here. So, all right, let's talk about the next area here. So Tesla. So I started talking about Tesla. This is an easy one. Elon Musk, okay, bought shares. Yay, golf clap. CEOs buy shares all the time, but Elon Musk, okay, bought a ridiculous number of shares for like $1 billion. Where does the money come from? So I don't know if anybody saw this, okay? And I'm not going down any political roads over here, but did you see that the Pope commented on Elon Musk? Hold on, I actually have the comment somewhere in here. I was a little bit disturbed by this one this morning, as I can't even freaking find it. Okay, where's my okay? Oh, in the first media interview, Pope Leo criticized the exorbitant compensation packages, okay, of corporate executives, particularly, okay, singling out Elon Musk's $1 trillion pay plan. So apparently, the Pope is a communist. I'm going to leave that one alone. So anyway, I'm just joking. Okay, but and by the way, literally it's $1 trillion pay package. But you have to realize he's not getting paid $1 trillion. He gets basically a big goose egg unless Tesla is worth 8.5 trillion. And I got to tell you something. If he can get this company to 8.5 trillion, I'm in, baby. He deserves the $1 trillion. I mean, I would agree that certain pay packages, they're completely exorbitant. It's ridiculous. Like is Jamie Dimon really worth it? Probably not. I mean, again, I don't really, there's a lot of CEOs that are probably not worth it. He is one that it's really hard to argue. I mean, you can't say like Tim Cook. I mean, Tim Cook didn't build, Apple. Tim Cook didn't build. What he got over at Microsoft? Okay, did they build anything? Huh? The current CEO? Absolutely not. Okay, what do you got in Amazon? Nobody even knows the CEO's name of Amazon. Why? Because it doesn't matter. Everybody just remembers Bezos because he built the damn thing. Okay, and he's worth every dollar. Most people probably couldn't name, could not name the CEO, or CEOs of Google. It's the exact same thing. You just remember some of the founders. Well, here we actually have everybody knows, obviously, Zuck. Okay. Everybody knows, of course, the leather jacket wearing Jensen. But there's nothing quite like an Elon Musk. And again, I don't want to be an Elon Musk fanboy in here. Okay. But if you can get a company to $8.5 trillion and your board is willing to basically say, here's the watermark, go for it, we'll give you $1 trillion of it. Okay. I'm down for it. Like, I don't see any problem with that whatsoever. And every single investor in that stock would probably agree with that. I mean, they're going to vote the pay package on anyway. Speaking of which, to me, the Musk thing, so he buys $1 billion of stock. Okay. He buys $1 billion of stock. As I said, where does the money come from? Doesn't even matter. He just borrows it. That's where he got the money for Twitter. Borrowed a couple of investors, yada yada yada. But it's confirmation that Musk is going to stay at Tesla. That's really what it is. Okay. Yeah. By the way, the trillion, okay, it's not even after years. So the $1 trillion pay package, it's just whenever he hits $8.5 trillion of market cap. It's like 10-year pay package, but you can end up with nothing. You can end up like with the company going bankrupt. It's possible. Okay. Steve Ballmer. Oh, don't get me started on Steve Ballmer. All right. Let's just say Steve Ballmer hitched his little wagon, okay, to the right horse. Okay. And that right horse, I know nobody actually likes Bill Gates anymore. Okay. They used to. Okay. There used to be something there that was a positive thing. Not so much anymore, but all of a sudden Steve Ballmer is buying basketball teams. I'll leave that one alone too. All right. There's a lot of co-founders that work that way. I don't know. Maybe I'm one of them. Let's continue on past Tesla. So is anybody, by the way, does anybody actually take the other side of that one on the Elon Musk pay package? I'm just curious because we're traders in here, and I'm just curious, like if people think like $1 trillion is an egregious pay package, if you hit 8.5 trillion. And it's okay to disagree, by the way. I'm curious. I just can't believe that a sitting religious figure would make a comment on that note in the first public address is just wild. And then again, it's from Chicago. I have trouble in my mind that somebody from Chicago is now the Pope. I just do. Okay. I just know too many people from Chicago. It ruins it for me. Just ruins it for me. Okay. I must continue. NVIDIA. Somebody's saying, so is it a good time to buy Tesla stock? I think that time, like, where were you back here? Actually, I was talking about buying it at 350, but I wanted it lower. Where were you back here, big guy? It's almost $100 higher. I would wait on that one. Okay. Jeff Bierman can be the Pope. I've known too many people from Chicago. Okay. Especially like South Side Chicago. So if the present Pope has that like South Side like kind of accent, it's ruined for me. It's just completely, it's ruining it. All right. Sorry. So now I got the room. So no one's taking the other side of it. And by the way, the income disparity, like 100% agree. Like 100% agree about income disparity. But at the exact same time, okay, his market cap goes to 8.5 trillion. Okay. It's still almost impossible not to value, something like that, where he's only getting, relatively mundane percentage. Was that 15%? 15.8% or something like that. So, all right, I'll leave it at I'll leave it at that. If you'll note that the VIX is slightly up and the volatility futures are down, that's because the volatility futures are coming into an expiration. What's happening is they're arbitraging them together. So yes, the volatility futures are coming down, but the VIX is actually coming up because the vol futures settle into VIX. And what you'll see the closer we come to expiration is this short-term volatility future, which literally only has 2 days left, will merge right on top of the VIX. So when you're looking at it right now, to the untrained eye, you believe that the VIX is actually up. It is technically higher, okay, but volatility overall is actually down. And to further kind of confirm that, you don't see really any positive price action, at least right now, out of the VVIX, okay? And I know that that's a weird thing to actually think about, but again, the volatility futures either come to the VIX or the VIX actually comes to the volatility futures. In this case, we're actually seeing both. They're actually, they're converging upon one another in here. It's kind of cool though to see it. And again, that means that when people look at this, they're like, oh man, the S&Ps are up 30 and the VIX is up. Okay, but that is not the truth. Okay, the truth is, yeah, the S&Ps are up 30 and the VIX is just doing basically nothing this morning. It's higher because it's in an arbitrage relationship with the volatility futures. So it's a little bit of the chicken or the egg over there. All right, onward and upward. I took a shot in here earlier, but okay, onward and upward from there. The next kind of story of the day would be NVIDIA. I'm going to cover NVIDIA a little bit twice over here. So NVIDIA is down. NVIDIA was down, okay, dramatically in pre-market, and it was down because of comments specifically out of China. NVIDIA may have actually violated some of their rules and regulations, which could cause a little bit of a, an issue. As right now, as we speak, the United States is in negotiations once again with China. Anyway, NVIDIA kind of violated portions of that policy. Enough said. The stock is actually down right now. Next on the list, and I think that this is probably one of the most interesting deals, CoreWeave. Okay, how many people have actually traded or seen this? CoreWeave jumped considerably today. The story inside of CoreWeave has everything to do with NVIDIA. Okay, when I actually read this to you and explain it to you, it's complete and utter shock and awe, in my opinion. Okay, I want you guys to make your decision of your own, but to me, this is one, if not the most pivotal story possibly this month. And you go, wait a second, the Fed's coming out and this is going on. The CoreWeave story, okay, speaks of a marketplace that is basically boosting itself. Allow me to explain. So CoreWeave, okay, enters into an agreement, and I'll actually detail it over here, entered into a new order form, okay, the order form under the existing master services agreement. Let me just shorten this up for you a little bit here. Oh, where is it? CoreWeave, okay, CoreWeave has an agreement with NVIDIA, right? For those of you that really don't know what CoreWeave does, they build these giant data centers with GPU, and then they lease that GPU, which is compute. They lease that compute out, okay, to all kinds of AI firms, especially smaller AI firms that can't afford, okay, to build their own, billion-dollar plus data centers. So CoreWeave uses, okay, NVIDIA. What do they use NVIDIA for? For the GPU. In this agreement, hold on. So CoreWeave is this company that builds these data centers, okay? And all of the data center basically has NVIDIA's crap in it. So NVIDIA is an investor in CoreWeave. It gets crazier. They have an agreement. Any unused, it says it right here, okay, capacity is not fully utilized by its own customers. NVIDIA is obligated to purchase the residual of unsold capacity, okay, through 2032. Holy crap. Not only is CoreWeave buying NVIDIA GPU, but then NVIDIA is turning around and buying any excess capacity. Do you realize that these idiots could go out there and build data centers, okay, as big as they want at this point? And don't worry, NVIDIA will pick up the tab on any unused portions of it. This is absolutely egregious financial engineering in here. How the hell is that legal? I got no idea. Okay. They haven't violated any laws. Okay. But you literally have big firm feeding little firm. Okay. Little firm buying all the GPU it could possibly get from the big firm. And anytime, think about this, when their earnings are coming up and maybe they didn't hit, maybe NVIDIA, their earnings are coming up and they're not going to hit their numbers. You just call up CoreWeave, you call up the CEO and go, buy $20 billion worth of GPU. Just put it on paper, baby. We got you. Okay. This is an absolute circle, okay, of financial engineering like I have never seen before. If you ever question whether this crap is a bubble, you need to look no further than that deal. It's the most ridiculous crap I've ever seen. This is worse than credit default swaps. Okay, much worse, because the entire market cap of the S&P 500, okay, resides pretty much on the shoulders of NVIDIA, which is basically feeding themselves. I mean, again, how analysts are not looking at this, they are looking at it. They don't give a damn because it's like, I work for Bank of America. Bye. Bye. Okay. It's crazy. Right. And then it's right out there in the open. And by the way, this is not a problem as long as everything keeps going up. The second the markets start to reverse, okay, then it's going to be a problem. Okay. And I'll give you an example. If NVIDIA over the next, let's say 6 months, lost 1/3 of their market capitalization, okay, how many lawsuits would come in against them? How many class action lawsuits? How about all of them? It'd be ridiculous. Okay, it's going to be open field day. It's completely, okay, out of control. And again, you make your own decision. You can look at the stuff; it's right out there. All you have to do is read, and like literally, CoreWeave can just keep building and building and building. That's the idea. So if there's ever like this excess GPU, like Blackwell's not selling that much anymore, just call up CoreWeave. Okay, call up the monkeys. The monkeys will buy it. Okay, Mikey will buy anything. Mikey likes it. That's how stupid this marketplace has actually become. But this actually reminds me of a deal. Like I know most people probably remember like MCI WorldCom because there was like massive fraud, but there was a deal going on for years where like Verizon, okay, and again, you can still look at this. Some people might remember this, some people may not, but Verizon many years ago was actually selling, okay, in these deals all of their tower space and then turning around and like leasing it back. So when they were actually to shore up earnings and so forth, they're literally selling and leasing it back. It's freaking amazing. Okay. And it's similar to how MCI WorldCom blew up too. Very, very similar. But I seriously argue that what NVIDIA is doing right now, okay, how many other companies are possibly involved? Supermicro, we know that's a scam, but nobody wants to talk about that one either. Okay. So this is a complete and total scam that's been outed multiple times where most of the heavy lifting in the investors, okay, are actually inside the company or family members. It goes on and on and on. But it's the famous saying, I'm not a big quote kind of person, but I always do appreciate like Warren Buffett's comment, you'll see who's actually wearing, shorts when the tide goes out. I have to appreciate that one because that's exactly what you're going to find out very, very quickly of how vulnerable a place like, CoreWeave will be. I won't even pull it up right now. How vulnerable it will be in the days and months to come. And again, you would only feel this pain. The thing is about markets, you'll only actually expose what is, I hate to use this term, but a Ponzi scheme, okay, inside of a marketplace. Financial engineering and Ponzi scheme, it's a very, very fine line. But in this particular case, okay, I mean, this is a structured scheme to where CoreWeave technically can keep, buying from NVIDIA. NVIDIA is financing it. That's what it comes down to. If NVIDIA keeps actually paying CoreWeave, CoreWeave actually can, still buy their product. Literally, the capital going in a circle. Anyway, the only change in tone over here would be if markets start to pull back. As soon as spending starts to slow down, CoreWeave immediately gets exposed when NVIDIA can't necessarily, cover its tracks with size and volume to other companies like Meta, and Microsoft and OpenAI. It's going to be an interesting one. So yeah, I got you, Jensen. I don't like him. Is it the leather jacket? Okay, possibly. What somebody asked, what don't you like about him? It's the leather jacket. Okay, he was not wearing a leather jacket though. I looked at it at the White House dinner the other day, but I also noticed that Mark Zuckerberg got a good seat, like right next to the president, where like Jensen was like the other end of the table, next to the I don't know. I'm gonna let it go. He was down there with the trolls. Down there with the trolls. Financials have actually backed off. They're basically flat on the day. The energy sector is totally and completely flat on the day. Today is a day that it's a one stock show, people. Google has a bid back under it. We saw it fade for 5 minutes. Google has a bid back under it. Okay, it's technically a two stock show, but that's all you've got here this morning. The advanced decline line is actually softened a little bit too. All right. Furball. By the way, I compared NVIDIA to like credit default swaps because what a credit default swap basically was is you're trading puts on your peers. And the relationship over there was such that they were actually crossing trades. It's like Goldman Sachs calling up JP Morgan, go, okay, I'll buy 50,000 puts on you if you buy 50,000 puts on me. It's that ridiculous. But when you looked at like credit default swaps and all the derivative trades off of those, the interesting thing is it pales in comparison to the magnitude of NVIDIA. NVIDIA is a $4.4 trillion company. Okay, think about how many derivative trades and how many companies are based on NVIDIA. I mean, you between derivatives and other companies in here, you could easily have a $10 trillion mess on your hands because of NVIDIA. Okay, at least $10 trillion mess. It could be dramatically more. Anyway, and that's one firm's risk. Okay, I'm not even talking about the management of risk. Like if NVIDIA really started to pull back, what damage would be done elsewhere? All right, continuing on over here. A couple trades I've got on. Bank of America, Google, Home Depot, Walmart. So I'll start with actually Walmart. Just spend a minute on this one. I just put this trade on. Okay, the Walmart trade is pretty simple. And again, I put this one on the other day. This 105.30 print. Okay, we've been kind of forming a little bit of what looks like the marketplace getting ready to actually break out in Walmart. That's all I'm trading for. Like I literally don't think any more than this, other than I can pull back like 3 years. It looks like Walmart's actually going to break out a little bit to the upside. It is what it is. I have 25 days and we'll find out. Now, this trade is a little bit unique, and I'm going to tell you why it's a little unique. I did not send this out as an in-out spread. This is actually a slightly out of the money spread. Again, it's a very slightly out of the money spread. So what's the difference? Why do I care? I used an out of the money spread. I'm going to show you the difference right now. Because if you looked at the slightly in the money options, the implied volatility, this is implied vol, okay, was a little bit high, like, 21, 20 and a half. So what I did is actually used like an at the money versus slightly out of the money. And I only got nicked for about a half vol point. Had I used an in the money versus out of the money, I would have gotten nicked for almost a full point of volatility. So it's just a, half dozen this way, half dozen the other way. It was a cheaper way to take a shot that I wanted to take. So I bought the 104s, sold the 107s. It's a $3 wide spread. And normally in a $3 wide spread, okay, I'm usually paying, $1.15, $1.20. This is right in that wheelhouse. Okay, so Walmart, okay, as I said, $1.15, $1.20 here. I was able to grab it for like $1.11. Okay, it's not bad. Again, I tried to circumnavigate some of the skew risk inherent in buying bullish trades. And right now, okay, people's skew is high. It's just something you got to deal with. It's really hard to place bullish spreads when the skew is that high. It is what it is. So anyway, I'm in the 104, 107 spread for about a $1.10, $1.11. That one is still like, if you're not in the trade, okay, it's still reasonable at the $1.20. It's not like out of the question over here. We're up just a few percentage points on here, but we'll see how this one actually goes in the days to come. Again, I'm inclined to believe, and again, this is a 3-year weekly. I'm inclined to believe that what we're going to see is Walmart having a little bit of a breakout. Okay. Nothing more, nothing less on that one. Google. Okay. Google, I am getting run over right now as Google has protruded to the upside. Talk about wow, that's gonna leave a mark. That one's gonna leave a mark. There's nothing I can do in this early trade over here. If Google breaks down, great. If it doesn't, hey, I'm taking heat. I mean, there's no question. I'm taking heat very, very quickly in here. This one also has 25 days left to expiration. There's not much else to update you on other than I'm still in Home Depot. Okay, in the Home Depot, whoops, swing and a miss. Okay. Home Depot, 18 days left. It's out of the money. Home Depot, though, is slightly down today. And Home Depot being down, it's a $419 stock with a almost $16 expected move. We're still kind of in the wheelhouse over here. So Home Depot, okay, it's getting beaten up, but it's not out of the ballpark and out of the realm of possibility for degrees of profitability. XLP, I'm actually going to roll XLP either today or tomorrow. I'm in no rush. Okay, I got time, baby. I got time. I'm going to roll XLP out again. I'll do it for even money or credit. So I'm going to sell the 82s. And I'm going to turn around right here and buy the 81s, 11-cent credit. And I'll send that one out if you're still in the XLP trade. So that is one, as I said, I'm in no hurry right now because XLP is actually seeing some sell side activity. And this is exactly where, okay, we could be very profitable even at like 79, 78 if it broke down in the next couple of days. What I'm so surprised about is like XLP is breaking lower, but Walmart is in the XLP and continues actually higher. Interesting, right? I find it interesting. So it's two different products on there. Okay. Onward and upward. It's pretty much it in terms of some of the positions. Oh, Bank of America. Okay. Nothing to do here. Bank of America has just been sloshing around a little bit since I put the trade on. Okay. It's, at or near highs, but it hasn't really done very much. I'm still right on the dance floor of where you want to be. I'm in the money on the trade, which is pretty wild. It just Bank of America has not done anything since I've been in the trade. It's frustrating, And you could say that a lot about the S&Ps. There's not, this looks like a gap higher. That looks like a gap higher. It's not, okay? If we come in here, we go to futures, adjust for contract changes, hit apply, hit OK. You can actually see again, we've definitely traded higher, okay, but we're not like exploding off of it. This is a 30-day 1 hour, okay. In the last 30 days, what have we really done? A whole lot of nothing, followed by a little bit of upward momentum in just the last couple of weeks. But as I told you guys, when we broke out of that volatility box, I expected a smash to the upside. And we still haven't seen, it's not violent by any stretch of the imagination to the upside. And that surprises me. In fact, the advanced decline line sucks for a marketplace that, supposedly is breaking out. And the truth is the performance is predominantly out of tech. Even when you look at the Dow is at or near highs, but the Dow is even getting dragged up by some of the tech stocks now. So the Dow has been kind of impervious to most of tech, just the way that the Dow is actually weighted. If you guys here, I'll pull up the Dow for a second. Excuse me. The Dow has been fairly impervious to tech, but Microsoft is a fairly big stock in there. Goldman Sachs is the biggest monkey now inside of the Dow. You should kick it out. Let's kick out Goldman Sachs. Huh? Yeah? Okay. I think it's a good plan. Kick out Goldman Sachs. Microsoft is by far and away the biggest tech stock in here. And again, size matters in the Dow, which is ridiculous. And I'm not talking about market cap. I'm talking about the actual share value. So it's kind of stupid, but at the same time, okay, tech has actually had an impact to some extent inside of the Dow, other than maybe Cisco, which can't get out of its own way. Look at that, Cisco back to 66. I think Cisco, didn't it once trade? I want to say it like once traded like in the 80s. Okay. Wasn't it? Okay. A long, long time ago in a galaxy far, far away, 82. Yeah. Yeah. I seem to remember it. I think I was actually trading it back then when it was right that neighborhood there. It was like 100 years ago. I can't believe we still talk about the financial crisis a lot. You do realize that was almost 20 years ago. All of us are like scarred from it. We're going back into it, man. And it's, I say all of us, even the Fed is scarred. They won't even allow like any cycles anymore. There used to be ups in the economy and downs in the economy. No more. Okay. We don't need cycles anymore. Speaking of no cycle, let's cruise over to the SPX for a moment or two. And talk a little bit about implied volatility this week and the triple witching. So we have a triple witch, people. What does a triple witch mean? Absolutely nothing. The SPX expires, the equity markets expire, and the futures contracts expire. Mind you, the big triple witching is actually on Friday morning. Okay, Friday morning, 2 out of the 3 go. Friday morning is the SPX. Friday morning is also the S&P futures. They expire at that point. Nevertheless, the thing to worry about with triple witching is there's so much contract size on here. It could shake markets up a little bit, like repositioning could really kind of shake markets up. I'll explain that more in a session tomorrow. I'm going to talk about the triple witching extensively tomorrow and the implications exclusively of the option trades in the SPX. When I say it can kind of shake things up, okay, you take this dramatic amount of risk off, okay, or roll that risk forward, and it changes up everything. And I'll explain that in quite some extent in tomorrow's trade. Nevertheless, okay, what are we expecting this week out of the Fed? So the way that the week actually kind of lays out here, okay, this is actually Friday morning, that's Friday afternoon. The reason I'm bringing those up, okay, because there's 2 expirations on Friday, but the one that should be a real standout over here is right there. Okay, so the Fed announcement obviously comes out on the 17th. That's Wednesday. But what I want you to see is that Wednesday does not carry, okay, the largest amount of implied volatility. That actually Thursday and Friday do. In fact, Friday PM settlement carries the most volatility. Do not, okay, rest your hat on very much. Like, yes, some volatility could pick up. Yes, we're going to see some movement off of the Fed announcement. But the interesting thing is we're pricing even more risk to Thursday and Friday. And again, that's like, don't take my word for it. Just look at the volatilities on here. So what gives? Well, effectively what they're saying is, yeah, the Fed comes out here, but the risk is going to play out in the preceding days after. That's it. Okay, to me, that's like really the only read on this. And they're pretty nominal differences, but any difference of implied volatility matters. And the reason it matters is the closer you come to the expiration, the higher that volatility is going to go. And we're packing in, $90 in movement to the end of the week. Speaking of the end of the week, it is a 90, basically $4 move for the week, which in my opinion seems very, very low. Okay. So it's a 90, $94, $95 move, which is, look, it's a $6,600 product. So that means 66 points is a 1% move. So the whole week, including Fed announcement, you're only pricing in 1.5% of movement, not even. Like, that just seems really like, could we move 1.5%? Hell yeah, we could. You move 1.5% in a day. You move 2% in a day, 3% in a day. They're pricing in, even with a Fed announcement, 1.5% for the entire week. And that bothers me. I think that leaves a lot of risk on the table because we start getting used to markets, okay, that get ridiculous. You start getting used to this. Like, every day the bell goes off, you start salivating, okay? Yes, I'm referencing you as being Pavlov's dog. So the little bell goes off and you're like, that's it. It's feed me time. Okay. And that works until it doesn't. So keep your head in the game over here, because as you're seeing, okay, it's nothing but tech. And the rotations can continue for a long time. Like all of a sudden we can start rotating out of tech mildly and start buying financials again. Like that crap can go on for a while. What I'm trying to show you here on the screen today is nothing is really involved today, okay, other than a handful of tech stocks. And even these, okay, they're not exactly strong. Like Amazon, all right, it's up, 1.4%. You got me on Google. You got me. Okay. But even as I said to you, even Tesla has faded a little bit, which to be expected based on its order flow. Um, so somebody's saying, does that mean the Fed announcement's baked in? To some extent, it's always kind of baked in. Like the probabilities in there, okay, are almost 100% of a quarter point cut. So the only surprise would be Jerome Powell's like speech. And, Jerome Powell's speech can definitely move markets. There's no question about that. Okay. And then we get some jobless claims towards the end of the week. Like, the week doesn't exactly set up like I was looking at this earlier. I'm like, why does Friday have more risk? The retail sales isn't going to do damn thing. That's not really going to move markets. It's just the Fed is going to have like a little bit of a hangover, like these jobless claims, whatever they can pick up a little bit. But it's like the Fed announcement feels like it's going to have a hangover into the remainder of the week. And obviously maybe some pricing around some triple witching in here too, which is it's just going to create a lot of dislocation of order flow, which, as I said to you, I'll discuss. By the way, the S&Ps are approaching their daily expected move. The S&P is approaching that $36 move on the day. And again, triple witching, okay, don't worry about it just yet. We're going to talk about it tomorrow. If you've got any futures contracts to roll, which I actually do have a few short futures contracts. Limited time left. That one's not one of them. Limited time left and a couple of futures contracts. So we're going to be rolling them if you got them. Anyway, with that, I am going to be bringing on the professor. Jeff Bierman is in here for the next hour. Not exactly the most awe-inspiring first hour of the trading session. By the way, it's also impossible to read volume right now in the S&Ps as the roll is going on. But hey, Jeff, how you doing, man?
This is painful if you're short and you're just sitting waiting around and keep piling in here. It
Oh,
really is.
there's nothing. I mean, look, it depends on what you're short. If you're just short S&P, sure, but
Yeah, I'm
um,
not, so I don't care, but I do care
yeah,
for the
some
TheoTRADE members. So
some individual stocks though, not half bad. Because again, I mean, the advanced decline line today is almost a 50-50. It's just, don't touch tech. Don't touch tech. I actually did. I shorted Google on Friday, and now I'm getting like my head popped off. But it's early, and it's 25 days left to expiration. I'm going to find out who I am. I may not like it, but I'm still going to find out. Okay. I don't like it. I don't like it here at all. This spread though is it's a lot cheaper than I paid for it the other day. That is it's not usually a good thing. So, question, Jeff, when's the two-sided trade going to come ripping back into this?
I'm the wrong guy to ask, but I hate to tell you this, Don, but I got 8 short positions on, and 7 of them are just crushing it right now. So you can short this market, but you got to be very careful what you short.
Well, yeah, it's been like that though. I mean, that's nothing new. That's I
Right.
mean, literally is you can short almost anything but tech right now.
Yeah.
And it's
That's well said.
financials. Like I've tried to short some of the financials. They're
Uh,
not really running against me. They're not doing anything right now, other than Goldman Sachs, which did actually break out. But J.P. Morgan, and just it's a grinding kind of marketplace right now. All right, I got to turn it over to you. What are you covering today?
Means to assess momentum trades, the momentum stocks, and they come in all shapes and sizes. So I don't want to make people think like, hey,
Momo.
it's just all NVIDIA, because that's the farthest thing from the truth. That's not how it works, Don.
Momo.
Yeah.
It's all in the video all the time. What are you talking
Oh,
about, man?
stop. I think it was down this morning.
It is still,
Yeah,
but
but it went to CoreWeave. They go like, oh, let's get out and move. Oh, there's a CoreWeave story. Move the CoreWeave. That's like, you know how it
that
is.
it is just amazing that
It's rotations.
it's so out in the open that one is buying the other and vice versa.
Yeah.
It's and yet if you're an investor and the stock goes up, nobody's ever negative. You know, nobody ever sees some of the warning signs out there until, like, you get hit by the train. All right, man, it's all yours. Have at it. I'll be here the entire trading session. If anything interesting happens, I'll let you guys know. Try to get some trades off throughout the course of this week as well. But hopefully we get some two-sided trade into this Fed announcement. Jeff, it's all yours.
All right. So let me kick this off and say good morning and welcome.